Hey, what's up, folks? This is Jesse with Keeping It Real Finance, the channel that always has your back and tells it like it is. Well, today's video, the theme is going to be winter is coming. And no, we're not talking Game of Thrones, but we are talking the crypto winter. So we know that every 4 years, the Bitcoin cycle peaks, and then it goes down for a couple years before rebounding to go right back up again, right? Every time it gains more and more market share, market value, it will continue to go up, it will continue to add value, but these market cycles are part of the deal, right? So I figured what better time than now to talk about this, as there's started to be a few rumblings in the market. I've seen a few alarm bells raised. Some people are starting to follow this stuff. And I think we need to have an informed audience so that you know, if you're trading in crypto, what you need to do here for what may be coming, right? So that's going to be the point of today's video. There should be a lot of great information within, so definitely stick around all the way till the end, right? Now, make sure to hit the like button, subscribe to the channel, and if you click the bell, you'll be made aware whenever I post time-sensitive content just like this, okay? And now, let's get it going. So what is the crypto winter? Well, because Bitcoin dominates 70% of the market, and we know that it historically moves in roughly 4-year cycles, just like the World Cup, just like the Olympics, you can pretty much count on the market peaking every 4 years, followed by a 2-year downturn, followed by a 2-year rebound. Now, the way I see it, in order to mitigate our risk, we need to first know when the peak is going to happen or happening. Second, we need to have a risk mitigation plan in place. And third, we need to know when to implement the plan, right? So what are the charts telling us? Well, with the recent market dip triggered by FUD and amplified by liquidations of leverage traders, many in our space have begun to talk about the coming bear market, aka crypto winter, right? Now, the rainbow chart seen here, found at blockchaincenter.net and created by Holger. If you're on Twitter, I recommend giving him a follow, by the way. Note, Benjamin Minshew of Elron and Michael Saylor both follow this guy. So, if that tells you anything. Now, the rainbow chart tells us exactly where we are in the cycle. So looking at the chart, we're in the FOMO intensifies light orange. You can see we've been in that since roughly February. Now, the closest historical pattern we have to this was probably in 2013 when the market briefly spiked, followed by a market pullback all the way to, quote, still cheap light green, followed by a roughly 3 to 3.5 month sideways trading pattern before exploding all the way into and beyond the top color red in the chart, which is known as maximum bubble territory. Now, we can also see that with each previous 4-year spike, that each time the market did reach the top color red before ultimately cooling off and downtrending. So that's important because we haven't reached that yet. So we know it's still coming. Now in this bull run, I see it that we still have 3 colors left to go through, meaning this bull run is far from over. Now, someone else I follow on Twitter is Justin Bennett. Now, he's a full-on chart guy who usually posts regularly on VeChain. However, recently he started to post about the market as a whole, showing signs of the chart of a potential pullback followed by a massive run up to the peak. Now in this post, he says potential of a 40 to 50% pullback before the summer rally. Now, same thing happened 126 days before the last cycle peak, where there was a 46% pullback followed by a 770% rally. So that's full-on altcoin season. That's the sweet spot that we're all hoping for, right? Now, 126 days from Friday's peak is August 19th, which lines up with his August-September market peak prediction. He goes on to say he thinks the market could peak at a $10 trillion market cap this cycle. Wow, that's a lot, right? Massive market cap. Now, here's a chart where he notates a light dip in 2017 before the ultimate rally, and where the same pattern appears to be occurring again this run. So, the bottom line is that historical charts have patterns, and those patterns repeat regularly. That's why I'm a strong believer in the chart. Now, there's really no reason you should be flying blind in this cycle or any other, and at the very least, check in once a week with the rainbow chart, okay? Now, when the peak ultimately occurs, it will be followed by a 2-year market downturn to somewhere around 2023 or maybe a little bit past that. So it's best to have a risk mitigation strategy in place. And the way I see it, you have 3 options, okay? So option 1, you sell all of your holdings at the peak and take a 2-year break. Hey, that's pretty easy, right? I actually even heard Sheldon Evans say this on his YouTube channels, that he was liquidating his positions and at that point sitting on the sidelines until the market bottoms. Hey, that's one way to do it, right? Option 2, you keep some of your holdings but sell all the rest, so maybe you only hold on to a few. And then option 3, you set your portfolio up for the greatest success even in a downturn, which is the way I see it through the following. So here's how I think you could do it. So first of all, we have Bitcoin. Now, I don't think you sell Bitcoin, period, okay? I believe in supply and demand, and it has been well documented that the supply of Bitcoin is plummeting, as it will only continue to get more and more scarce. So Bitcoin is the world's first scarce digital asset that dominates 70% of the market. Now, according to Michael Saylor, Bitcoin has already been crowned the winner, which is why he and MicroStrategy are all in, right? So do you honestly think MicroStrategy, Tesla, the Winklevoss twins, or anybody else with substantial Bitcoin holdings are going to be liquidating their Bitcoin positions because of a 2-year downturn? Probably not, right? If anything, they're going to be adding to their positions at discounted prices, which Michael Saylor has already shown that he does this again and again, because they know the 2-year run-up to the next peak will be even bigger than this one, right? Now, next, we have projects that you strongly believe in due to the idea, the use case, the team behind it, its ability to change the world, etc. There are numerous projects like that in the crypto space. I have reviewed many of them. Now, again, you could be increasing your positions with each market downturn, as every downturn presents opportunities to buy at discounted pricing, all right? Now, remember that we know in late 2023, early 2024, the market will start rising again. So even though it's going to be down for a little while, it's coming back, folks. We know that. Now, the third thing you can do is convert many of your holdings outside of Bitcoin into proof of stake coins that can be staked throughout the downturn and continue to earn you passive income regardless of market conditions, right? So some examples. So think Cardano, Polkadot, Solana, Algorand, BNB, Luna, Cosmos, Tron, Zilliqa, Matic, Harmony One, Thorchain, Ubix, Atomic Wallet Coin, Cody, etc. The list goes on and on and on, right? So the point here is you could be staking your coins, and then who cares about the market downturn because you're accumulating more the whole time, and then eventually it's coming right back up, right? Now, lastly, another great option for a 2-year market downturn is to convert your existing positions into a stable coin like USDC that is pegged 1-to-1 to the US dollar and is basically immune to the crypto market volatility. So you don't care if the market's going up, you don't care if it's going down, right? It stays the same. Now on Voyager, which by the way, referral links, video description for Voyager, as well as all the other platforms, wallets, TradingView, etc., where you can get bonuses, you can earn 9% APR on USDC. What this means, a lot of people don't understand this. You're not getting 9% a month. That's not how it works, okay? You get 9% divided by 12, and that's what you should be getting per month, okay? So if you converted a substantial amount of holdings into USDC and you left it in there for, let's say, 2 years, well, you're going to be getting roughly 9% a year on those USDC holdings, which again is a great investment. That's solid. If you look historically at investment returns, that falls right in line with a really good investment, okay? So you could easily do that and not even worry about any of the ups and downs or anything like that. Set an alert on your calendar for 2 years from now and then come back and look at it then. Right? Crazy. So to recap, in option 1, you would liquidate everything and wait. In option 2, you liquidate most of your holdings except for the main HODLs, the one you're keeping really long term. Or option 3, you continue to hold Bitcoin, you acquire more of the projects you believe in, and then you shift the remainder of your portfolio into proof of stake and stable coins. Now, for a time frame, when I would recommend shifting into this strategy, obviously, if we're looking at maybe an August-September peak, then I would probably say you want to start maybe thinking about shifting in July. So July would be your month to sort of start getting ready for what we know is coming, right? The White Walkers have broke through the wall. We know they're going to be at the castle here before we know it. It's probably time to start getting ready for that. Now, we know crypto winter is coming, so you should have plenty of time to set up your portfolio for success, all right? So that's it for today's video. I hope it makes sense. You know, I don't want to scare everybody off because of crypto winter, because again, yeah, it may downtrend 2 years, but then it's going to uptrend for 2 years stronger than it was in that prior cycle, right? Each cycle we build, it gets bigger, we get stronger. So why not accumulate at discounted prices, right? You know, same thing, you know, I like to equate crypto portfolios to a retirement account. And if you think about it in that respect, if you contribute to a retirement account through your employer every 2 weeks, you really don't care if the market's up or down because the money's going in regardless. Over time, it builds. It just keeps building, right? It's that same kind of mindset here. I think you just may need to shift a few things around to get ready for it, right? We want to maximize. That's the point. So that's it for today's video. I hope you enjoyed it. If you did, make sure to hit the like button. Don't forget that I'm also on Twitter at KIR Finance, where I'm tweeting and retweeting on a regular basis. By the way, I just tweeted some stuff about the AWC token on there. Check that out if you're looking into AWC. Some things that I was sort of aware of, but then I encountered it and I was like, wait a minute, I had to figure out the situation. So got some good information though out there on AWC. Also, still working on the Patreon. Hopefully I get that going soon. And for a friendly reminder, this is Jesse with Keeping It Real Finance, the channel that always has your back and tells it like it is. And I will see you on the next one. Later.